Well, hey everyone, welcome back. It's great to see everybody. I'm glad you guys liked the little Trade Like a Professional series of videos. I gave you a couple of the video vignettes from those over the last several days, and got a lot of great feedback and heard from the support team that you guys really liked those. So we'll try to do that again, maybe at the end of the week, give you another one of those videos later this week when I'm traveling over the weekend, perhaps. Today, great day. Closed out all existing options positions, opened new existing options positions, and very excited. Just continue to have a fantastic options program there with the alerts. So very excited about that, especially with the market volatility. And let's take a look at that volatility right now. So I wanted to start out with Apple tonight. The reason why I want to start with Apple is because we might, for the first time in months, I told you that I kind of took a respite. I do these like 1,000 share block trades of Apple, and for a while here, I've been kind of taking a pass on that and really just focusing on the stock index futures and such. Whereas now what's happening is we've finally gotten a little bit of life, breathing back into this thing, and so what I'm going to be looking for now going into the coming days is, can we hold the trend here and start to get a little bit more of a support mechanism underneath of us, and that'll, if we can do that, especially, I want to watch how we react around the $600 psychological round number level here, resistance. So over the next couple of days, I might see a lot of activity really flaring up, maybe some Apple options trades, and also look for some underlying equity trades here as well. So we'll kind of keep you in the loop there a little bit on what's happening there. As far as the euro is concerned, euro right now, not going to be doing a lot with this the next couple of days. We got the FOMC meeting on Wednesday, and we'll see if that can breathe a little life into this. But until we get back above $1.35 at this point, really not a lot to do with this unless you're trading the actual European session. For all of you that are trading the European session, there might be a little bit of an opportunity back to the $1.39 level. But unless we get through that $1.39 level, just not really looking at doing a lot with it otherwise. As far as gold is concerned, gold continues to tighten the noose around this thing as we go ahead and we go from wider ranges to tighter ranges, to even tighter ranges here. So we're kind of in a lot of, gobbledygook here of mess, if you will, between support and resistance levels. And we got to break out of that until we can do much with that. So we'll see if the FOMC meeting can help that later in the week. But in the meantime, when it's in this area where you got numerous support and resistance levels all on top of each other, that's just a 50-50 trade, and none of us need to do anything with that. You can throw a dart and do better than that. So as we go ahead and we look at crude oil, if we get down below today's lows in crude oil, we'll be looking for further downside. Still got another 80 ticks, 90 ticks of opportunity down below today's low to the next major rising supports. And if we get down below those, then we could see a move all the way back down to 97.50 initially, and then potentially all the way to 95. So be watching that for both intraday and more swing trading opportunities in the next couple of days. As we go ahead and we take a look at the bonds here, we continue to struggle at the distribution bars that we set a week and a half ago, right back over here. We had this big fat distribution bar. We came up this morning. Remember, the way these distribution bars work, we draw them out into the future, and those are basically big fat support resistance levels. Well, right now, so we came up, we tested kind of towards the upper end of that resistance, and then failed miserably going into today. So until we can break out of that double distribution area, because that's what it is at this point, you have Friday's close, which was a distribution bar. You have the close a week and a half ago. So it's a double distribution area. And until we go ahead and we break through that, not looking for a whole lot from it. But if we can break through there, then we've got a nice move back to the 136.28 level potentially. So we're going to be focusing on that. As we look at the stock index futures, last but not least, man, it was great stuff to add to some of the positions. Like we close out IWM, for instance, today. Open some new positioning, great stuff, and in our options plays. But then on the future side too, of course, this is made for some great trading. Friday we banged out several trades in the morning with each other. Then we went ahead and came in this morning, fired off more trades, trading, and so as we go in, we take a look. We're on the edge here. We've got the story here is really a story of 2 and 2. We've got the Russell, which is holding out for dear life at the 200-day moving average. You got the Nasdaq, which which is holding on, for dear life at an intermediate support level. 200 is still down here, but we've got, so we got some room to grow down to the downside. Meanwhile, what's interesting about this is we've been getting a lot of hope for the long side traders who watched, for instance, earlier this morning. In fact, I had to coach our retail traders this morning that are new to our student family about this, because the Dow actually started pushing above the speed lines just a little bit, and that got some people excited looking for the long side trades at just the wrong time. I literally sat there and said, I don't think that's a good idea. When the people were asking about the long side trade, 5 seconds later started the sell-off that led to a really nice rout in the market there for the next few hours. And so late in the day, we were able to go ahead and rebound back up there to the speed lines. But you can see we're stuck there on the Dow, and we're stuck there on the S&P. Meanwhile, we're just holding on for dear life. So we've got a market on the edge here. Remember now, if the Russell can actually make it through this 200-day moving average, there's really nothing stopping us for much deeper corrections here. In fact, let's go ahead and take a look at this from a weekly basis. From a weekly basis here, you can see if we get down a whole lot lower here, we've got a great deal of opportunity to the downside. So we're holding on for dear life at some very key support levels. You see multiple support levels coming in there. Now, you recall this time I was forecasting a bigger correction, and the reason why was because for the first time in a year and a half plus, we actually had a negative divergence on my core trigger on the weekly chart. Okay, so not only did you have the divergence on the fast trigger, but you actually had it on the core trigger. And that's the first time in a very long time that we've gone ahead and had that. Remember, this is a weekly chart here, so this is going way back here into September of 2012. So we finally went ahead and got a negative divergence for the first time here, in the first quarter of this year. So I was looking for a deeper correction. Now, with that being said, we continue to test these levels, as you can see here. Let's make sure you understand those levels, because if we get down below those, that 1091 area, for instance, we've got a lot of room to go to the downside. That could be quite a move. So as we look at that compared to the other stock index futures, you'll see the NASDAQ is in a relatively similar situation. The NASDAQ's got a little bit more support down below us, but it's got lots of gaps in there for free fall type activity. And then as we look at the other stock index futures, such as the Dow, so we'll look at the Dow since a lot of people have been asking me about that, thinking long side trades. The Dow, we're still focusing on that big, thick blue line for upside moves. At the same time, you can see there's a lot of air down below here if that Russell keeps going to the downside. So you definitely want to look at the Russell as a guide to what's happening here as well, because it's having disproportionate moves that are dragging the rest of the market with it. And so as long as it continues to drag the rest of the market with it, like it did this morning, you have to be conscientious of it. So we've got some markets that are right on the edge of the abyss, again, holding on for dear life on that Russell 200-day moving average. Again, you see the big fat accumulation bar it put in there last time. Well, remember what I told you about accumulation bars, right? You draw the accumulation bar out, just like the distribution bars, draw them out, and now that's your area of support as you go forward, right? Well, so far we're still holding on to support. In fact, today actually made another accumulation bar. So lots of great stuff here, and kind of a double accumulation. But if we break down below that, wow, look out below. So we've got a market on the edge here, and we're just going to enjoy the trading, enjoy the options trading, and enjoy the futures trading as we're going ahead, and possibly the stock trading, as I said, with Apple kind of coming alive there as well. All these different things are just making for a fantastic 2014. So be there or be square. We'll look forward to seeing you guys in live trade room tomorrow morning or in tomorrow night's videos here. Take care, everyone, and have a great evening. Bye-bye.